In this morning's U.S. Bank Economic 360, bull markets, bear markets, corrections, all terms that we hear describing the direction of stock prices. With us this morning, Mike Denneman, Vice President and Senior Portfolio Manager for U.S. Bank, to help us sort out where we stand with the current market. Mike, good to see you.
Good morning,
Thanks for being here. So, stocks have been rising on a very regular basis to all-time highs. So I would assume that we're in what they would call a bull market.
You're absolutely correct. Stocks have been rising now pretty regularly for the last year or so, and with stocks up 15% to start the year and up over 20% over the last 12 months, we're most certainly in a bull market, which is a term used to describe a long-term upward trend.
So long-term it's been up. Recently we've seen a bit of a correction. Tell us about that.
Sure. So we know that even when stock prices are rising, they don't go up in one smooth, continuous line. There's always some bumps along the way. And right now we're experiencing some of those bumps, which we term a correction, generally defined as a drop in prices of about 10% from the peak. And while that sounds drastic, really it's pretty much just the regular ebb and flow of the market rather than an indication of something truly negative. So to your point, we're down about 5% over the last couple weeks, so we're not quite to correction territory, but we're in the ballpark. And that sparked a lot of conversation about, is now a good time to dive into the market, or do we have some more room to go on the downside?
Yeah, as a lot of us watch the prices go up, up, and up, it's like, this can't sustain itself. So this correction, could this lead us back into a bear market?
Well, it could, of course, because corrections and bear markets go in the same direction, downward. But a bear market is usually much more severe, defined as a loss of 20% or greater. So, that's a greater magnitude than a correction. And of course, that plays out over a longer term, sometimes months or even years for a bear market, as opposed to a relatively short time frame for a correction. So usually a correction evolves into a bear market if there's a significant negative event. Right now, we don't have that significant negative event. Think the collapse of the tech bubble or housing prices that we had several years ago. So unless we have that catalyst, we're much more likely that this correction is simply just one of those periodic bumps in the road rather than the start of something much more severe.
I notice you have bulls and bears on your tie. That's interesting. I've got a correction tie on. Thank you, Mike. We appreciate you and U.S. Bank.
Thank you, Brian.